Good morning. This is Axel Merk, President and Chief Investment Officer of Merk Investments, and I've been giving these daily updates here. Today's going to be comparatively brief. As I go through these, I need to show you some disclosure here,
And so let me go ahead and take care of that. Please read that. Um, the most obvious news isn't really news, it's quarter end. Quarter end means that there is rebalancing taking place. At the end of February, not all that much happened. The money didn't move from bonds into equities, although that could have been the reason for some shifts. Today, I think all bets are off exactly how this day is going to end. So as I speak here after market open, who knows what's going to happen. A few things, though, that have happened. And one of the most curious things that's been happening maybe in the funding markets. There's a lot of stress, a lot of need to get dollars. And the most recent available data, those might have a significant lag, is that the Fed swap lines are at about $200 billion. That isn't all that much. We had over 600 billion during the peak of the financial crisis. I wouldn't be surprised if we go up there or possibly above that. Now, that said, the Fed today announced a repo facility for central banks and quote unquote other monetary authorities. Singapore calls itself a monetary authority, central bank. Who knows what exactly that means? But the short of it is that when you have these swap agreements, you need to have a contract with the respective central banks. Whereas, and I don't know all the details, but it's my understanding that this is a way of tweaking the program. Most notably, they can, with kind of the stroke of a pen, make it available to many more counterparties. Also, the swap lines, there's a punitive premium. It appears to be that this is less so, if at all, with the central banks, and so this is really meant to get the scarcity of dollars resolved. Keep in mind again that a central bank does not increase the supply of treasuries; they increase reserves, so they can kind of foam the system. But of course, if the treasuries aren't in the right place and whatnot, they can provide liquidity in some way, form, or another. Um, and so I wouldn't be surprised. And then who knows? In the swap lines, there's public disclosure of who the counterparties are. I do not know whether the repo market will have the same. And so maybe there's some political considerations here as well. There is an odd side effect here, and unless you are deep into the FX markets, you probably don't see that. But I think it's worth pointing out. The um, Towards the end of the month, there's always an increased need for funding, and the market makers are trying to gauge what that need is. It does appear that market makers have overestimated that. And so now it's actually, rather than kind of paying a premium to get access to dollars, there's a little bit of a discount in some markets. So there's some oddities in the markets again. Just shows everybody how stressful this is. As I mentioned, that I'm looking at my Bloomberg here and see the VIX is at 55, and that's supposedly now a calm market. So 55 is the new calm for the time being. Beyond that, anything else you can really look up in the markets yourself. I'm not going to just repeat here what it says here. I just want to mention, I hope everybody stays safe here. All the best, and good luck looking at your 201k when you get your monthly statement. With obviously the tremendous recovery we've had in some of these markets, we will not see quite as dramatic a shock for those who haven't had to sell out or were selling out at the bottom. Now, have we seen the bottom of the markets? I don't know. I can't give you a forecast on this. My personal view is no. And the reason why my personal view is, and this is not investment advice, just like anything I say is not investment advice here, the personal view is not, because I do think the ripple effect will be here to stay and will be there to last. Consumers are shell shocked. Now, all that said, the efforts by governments are truly astounding. I saw this morning, I do try to survey news around the globe, and so one of the things I saw is the state of Bavaria. That's an economy, size is about 700 billion euros, announcing another 60 billion euros in aid. I do believe that's mostly loans. I'm not 100% sure on that. I haven't looked into the details, but again, that's close to 10% of the kind of the GDP of that state. That's on top of the massive stimulus of the federal government, which is also expected to show more. So similarly in the US, of course, we will see more. The devil is always in the detail as to how helpful these things are. Just writing a check doesn't get your money very far, but if you provide liquidity on a loan basis, that could get you much further. On that note, across my desk came yesterday some details of the CARES government program for businesses, the sort of access to loans. And at first blush, it does appear that a lot of businesses, small businesses, this is 50 or fewer employees, are able to, about that, a lot of small businesses are able to access that. And so that should keep many businesses alive and around. But the question is, again, how kind of, is this going to be enough to kind of to buffer the downturn sufficiently so that the secondary effects of layoffs are not going to happen? And that's really a function of how long this lasts. And ultimately, this is a question of how coordinated this all is. I very much doubt this will be coordinated, the crisis response. It's just on a global scale, it's all but impossible. And even in the US, every region is probably going to have a different approach. Now, all we need to do is to get this R number, this infection number below 1, and we'll be fine. And so it doesn't have to be a perfect approach, but I would expect there's going to be a patchwork of solutions. And so we'll find out how many months it will take. If the recession does take a more extended period, well, markets historically often bottom several months before the end of the recession. So your guess is as good as mine as to how this is going to play out. So with that, I wish you a good day, and I'll continue to try to take care of these things and give you a daily update for the time being.